Pretty calm day in the markets until around 12:30, where we had this big flush just like we had on Friday. We do have a big week ahead in the markets. We have earnings and we have the Fed meeting as well. If you're new here, welcome to the show. My name is Michael Silva. This is the Daily Stock Market Brief. I do these shows Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Today's episode is going to be short, to the point. So let's just go ahead and get into it. All right, everybody, welcome back. I want to start off showing a chart of the dollar and the yields because I have a strong feeling that if you can really figure this trade out, you know, where are yields going, where's the dollar going, you'll have a very big advantage in the overall market, whether you're going into certain stocks, certain sectors. And let me go into a little bit more detail here. First off, we've been talking about this correlation with the S&P 500 or certain equities and the dollar. You can see here when the dollar topped out here right around 93.5, it started falling. This is pretty fast. This is a pretty dramatic move to the downside. And you can see at the same time, the S&P 500 was breaking out. Now, we talked about seasonality charts, right? Seasonality, typically April, you see a nice big run up into April. To around mid to late April, you typically see a pullback of some sort. Not always super dramatic, but there is one based on seasonality. And then, you know, the whole saying is, you know, sell in May, go away, go. I don't know what the saying is, but it's something about selling in May and then come back later. I don't know if that's going to be the case this time or not. It's too early to tell, so we got to just be prepared for if we are going to be continuing to ramp up to new highs. Now, the dollar today, another slightly down, small range candle. Same with the S&P 500, which we'll hop into those charts. The dollar looks weak here, right? We're back below the 20. We're back below the 50. We're back below the 200. The bears have control over here. So unless something dramatic happens where we get some sort of squeeze to the upside, right now, the bears are in complete control, which tells me things like equities are the place to be. All right, the S&P 500, the SPY, various other equities, Bitcoin potentially, potentially gold and silver benefit from this. But there's also another element. We need to look at yields. Now, yields, it topped out, the 10-year topped out right at 1.7, just slightly above that. And now they've been kind of pulling back. And, a lot of people might think, okay, this is the top, that's where we're rolling over. But it's not like it's been, from a technical standpoint, like it's been selling off. It's really a period of consolidation or a subtle pullback, creating a higher low to potentially head higher. Now, I don't know if it's going to be heading higher right now, but what's important to note is, who benefits, what sectors benefit from higher yields? And if this is just holding steady right here, financials is something to keep a close eye on. Now, in last brief that I talked about the IWM and I talked about the BKX. Both financials and then the IWM. The reason why is the IWM, which is the Russell 2000 ETF, is because 20% of their holdings are in financials. And we'll go through the chart, but you can see that a lot of strength came in there. And it seems like a lot of growth stocks are also seeing some strength. So we'll talk about that. To me, this doesn't look like it's heading lower. It looks to me like it's consolidating to potentially eventually move higher. And I don't know where that might be, maybe 1.8, 1.9, potentially even 2. But as it stands right now, it's really just floating in air. So it's very hard to determine from a technical standpoint of, where's this going? So I want you to be aware of that. And while you're seeing this price action in the markets, you can see that it's a very difficult environment to be trading in. So don't feel, if you feel overwhelmed or, unsure what to do, the best thing to do is typically, lower positioning size or kind of just step away from it. I've been trading a lot less as of recently just because I can't get direction on anything. Here's the market dashboard. Energy took the lead today. Materials and technology. My eye has been on materials. We talked about the sleeping monster scan yesterday, and a lot of those little sleeping monsters woke up, and we saw some pretty big moves actually in some of those stocks. So, it's a great scan. It really is. And if you use it effectively and if you look for the right sectors, I highly encourage you to use that scan to give you some more ideas. Now, I'm showing you a free version, right? FinViz. There's other places out there. Somebody commented about MarketSmith, and MarketSmith, you can run the same scan, but you can get into more detail with fundamentals and stuff like that. I'm more of a technical trader. I do like adding in fundamental perspectives in various trades and swing trades, but the free version of FinViz works great as well. Now, from a daily perspective on the S&P 500, resistance is still being respected at this particular point in time, and we have a very small range candle, which suggests that, okay, momentum might be slowing down here, but the bulls are still very much in control. We're above the 5 EMA, above the 20, above the 50, above the 200, all right? And we have a slight negative divergence building here. Okay, so not much price action overall in the markets. But what I want to call out here is, where's the risk to the upside? How high can we go till we potentially see an area of resistance? Well, I mean, we're at an area of resistance, but I want to call out the upper Bollinger Band, 4,248. 4,248 would be that risk to the upside, the upper Bollinger Band. So we've been holding on the upper Bollinger Bands for quite some time. You can see, and it holds there for a while. So if we do start breaking out, I would imagine that could be an easy target to potentially go reach out. So keep that just kind of in mind. But typically when you do see these small range candles, momentum slows. And let's just look at all this. Look at this price action. Actually, let's just zoom into the chart. Look at this price action. Chop, 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 chop. And look at today. Look at today, it went nowhere. And look at volatility. Look at the VIX. Didn't do anything. Okay, so we gapped up, we have a gap below us, and we still have a gap above us. Didn't even fill the gap above us, and we didn't come back down to test this gap. Today, we grinded higher and higher, and then all of a sudden, out of nowhere, right, we saw this big spike to the downside, just this monster move. And we saw that here at around the same time the previous trading day. It's important to understand where the gaps are, too. So I called this out on Twitter. If you don't follow me there, you can follow me there. But I said it's important to understand and know and be aware of where the gaps are, because if this big sell-off was taking place and you were paying attention to where the gaps were, this gap, it didn't close fully based off the close, but from a 15-minute perspective, or from a 5-minute perspective, 5-minute perspective? Yeah, from a 5-minute perspective, it touched the last candle of the day open. And it tagged it with an ascent and then bounced from that area. So you would have understood that zone was an area of support. It's never like exact, but it can be at times. So I want to call out a couple areas here. So first off, right below 417. So basically 417 to around 416.50 is this zone of support. It acted as resistance, support, and now it's acting as support again. Area of resistance is 418. I mean, my guess is that we break through this 418 and then all of a sudden we just scream higher. But, who really knows? I'm not positioning like that at this particular point in time, just because the price action is a little too wonky for me. So if I find a good setup, I will take that setup, just for full disclosure there. But the bulls have... The bulls are in control here, right? Where price is above the 50-day moving average, 200 sloping up, got a little bit of gap below us, and we're just in this period of consolidation. Every time we get up to this 418 level, it seems like there's just a supply drop of just overwhelming supply, and it just gets hit to the downside, which tells me if we start breaking above that, that means to me that there's an overwhelming demand coming in and stepping up, which could really just rocket this forward. Now, one thing to call out, when resistance can't be broken during the cash market sessions, typically what you see is the overnight session gap right through that level. So if we start gapping above it, look for 418 if we start pulling back as a potential area of support where you can play a good risk versus reward trade. Just be very mindful that we are in some overextended territory. So if we get a gap up, you might get selling pressure. So they might be buying into close and then selling it to open. So just, there's it's just crazy times, man. It's just crazy times. Here's the Dow Jones. The Dow Jones was one of the indices that were down on the day. That was the only index that was down on the day here on the market dashboard. Not much to talk about here, just a bunch of chop back and forth. We saw also weakness in the transports, but overall still in bullish context at this particular point in time, so we'll continue to monitor that. The IWM, now this is what I talked about on the previous brief. It looked to me like there was strength coming in, or potential strength coming into both IWM and then also financials holding up pretty well when the yields have been kind of pulling back slightly, which tells me that this was an area of consolidation. So I had this rounding pattern because everyone's talking about this is an advanced head and shoulders pattern, but we also mapped out like 225 as an area. If we start breaking above that, I think we can scream higher. And this setup right here to me looks like it's coming out of a consolidation and we're going to head higher. Now that could change in a snap of a finger. So you must be careful. Another thing that I posted on Twitter was IWO. This is the early stages of a breakout for iShares 2000 Russell Growth ETF. And when I posted, I said, this looks like a 10% opportunity. Most of you that do follow me on Twitter, you probably saw that post. And the RSI, look at this. It's right back above 50. We saw a breakout here. We see, a couple good days of volume, nothing too crazy or as of right now, but we're back above the 50-day moving average. I think that this is actually a really good setup, and it's the early stages. So keep an eye on the IWO. It seems to me maybe it's because it's coming to earnings seasons. Maybe we have some big earnings coming out. Maybe it's because we have a Fed meeting and we're starting to see this move right back into potential growth. And then also obviously the IWM small caps here too. So something to monitor. From a 30-minute perspective on the Qs, resistance is at 342. Support is right at 334. It's been channeling here since basically April 6th, April 7th, just back and forth. So just be mindful that it's just a lot of chop right now. So you can pick up shares. There's probably some good demand right down here at 334 to 336, but a breakout right up above 342 could be a good entry too as well. Now we might also, if we can't break above this during the cash sessions, the overnight session might take us above that. So just like I said about the S&P 500 applies here, same with the Qs. But just the overall looks of this makes me think that we're going to be breaking out to more highs. So we'll see how the day progresses. Now that is just a speculative opinion. So don't hold weight on a speculative opinion. Do what the price says to do. Right? So if I say, oh yeah, I think it's going to go up, that doesn't mean anything. Okay. What matters is what the market does. I just want everyone to really kind of understand that. So indicators, I want to show lumber to gold. Lumber to gold is still above zero, but it has been falling, which means that gold has been holding up its performance to lumber. I'll be bringing this back once we get more closer to zero or below zero as the warning sign. And if you haven't read Michael Guyad's white paper, you can read that or watch the interview that we talked more in depth about this specific indicator. The VIX, the Bollinger Bands are contracting tighter and tighter as this consolidates here more and more. Remember what I talk about, right? They can consolidate for quite some time, but when they contract tightly, you can see some very quick movements. So just be aware of that. We've seen little shocks of quick movements here on Friday and then today, but it has nothing in comparison to like a breakout kind of VIX candle like this, like a boom up to the top of the 35 range. So right now, it's kind of just drifting sideways to lower. The resistance is right around 20, and the lower range of support is at 15.44. As we drift down lower and lower, you could pretty much throw darts at a dartboard and probably find stocks that'll just drift higher and higher. Okay, it's easy. It's very easy to invest when the VIX is very low, but it gets a little bit more complicated when you see these spikes to the upside or higher readings on the VIX. So we'll continue to monitor that as well. A couple things from a divergent standpoint: the NIAD, the NYSE advanced decline. All day today, we have been at a negative divergence. So as the S&P 500 had an up day, its internals are showing a little bit weaker here. So I like to look at that. Just don't hold too much weight on it. We've called it out before, and it was an excellent call out, but we've also called it out before, and it was important to pay attention to see if it starts breaking above this, because then we saw the S&P 500 really take off. So keep an eye on the NIAD. If it starts breaking above this kind of area of resistance, we'll continue to monitor that, and I'll probably post on Twitter if I'm available at the time. Here's the BP NDX. Very subtle divergence as it's almost back into overbought territory in a pretty overextended reading. Overextended readings and overbought territory can stay overbought for quite some time. Just take note that, it's not the best time to go long from an internal perspective, but that doesn't mean that it can't go higher. All right. And then we got the BP SPX. BP SPX is no longer overbought. It is a little bit overextended here on this reading. Perhaps we go a little bit higher and create that negative divergence, and then we'll call that out and be a little bit more cautious. As it stands right here, no red flags. Here's the NI high low, the NYSE high low index. Slight divergence here. You can see a high to a lower high as the price action continues to drift higher there. And then we have the sell signal. I haven't talked about this for quite some time just because it hasn't really been throwing off any warning signs. I just want to call out here that when it goes above red, that's when you want to be, that's the warning. That's a sell signal. It doesn't mean get rid of everything. It means make sure you have stops in place, because when we've seen it cross the 10-day moving average, cross above the 0.8, we have seen some pretty significant moves to the downside or periods of consolidation. So, it's just nice to not have your money tied up in a stock or in an ETF where your money is just kind of trapped or heading lower at cases. That's how I look at it. But from a CPC perspective, the day it's very bullish. So a big bullish spike to the downside right now. So in full bull mode is what that reads. Commodities, we're going to take a look at the CRB. CRB continues to press higher. A little bit of a negative divergence clearly right here, but inflation is not taking place, right? As the CRB index continues to fly higher. So we'll continue to monitor this and see how this develops. There is resistance right around 200 to 205, that zone in there. We'll continue to monitor that. Here is WTIC, hammer candle right at the 50-day moving average. Is this going to bounce from this area? Is it going to hold and we're going to start drifting a little bit higher? I should have drawn a little trend line from this low and connecting this, because that does look like it's holding up as a little support. And if it cracks down, I think we easily go touch down to 57. If we break through 57, we're going to be looking more down towards this 48.50 range. And from a weekly perspective, it broke out of a 2-year trend line, and that would be the back test of that trend line. I don't have that chart in front of me, but I do want to just call that out. Here's Bitcoin. Bitcoin is very interesting right now. So I didn't pull gold and silver up, but it's because I really wanted to just talk about a little bit more in detail here about the price of Bitcoin. We did see it crack down through this. Actually, it was more of an ascending triangle, and then it was a false breakout. Then I called it a falling wedge, and then we saw this move to the downside. Pretty aggressive move, but today up 10%, big move to the upside. Now, I want to call out here on the 30-minute perspective, we saw these symmetrical triangles crack down. We drew out another symmetrical triangle, crack down, almost full measured moves on this one, and same with this one right here is a full measure move. But now what's important to call out here is this trend line. It was support, crack through. It was resistance, and then we finally got back above that trend line, and then we kind of actually even back tested it here. So perhaps we drift like this and then crack up higher. But this, to me, from both a daily perspective and then from this perspective, it's showing me that a lot of strength is coming in. And I mean, if either that's just a wicked fake out, or that is the start of going to go take out the all-time high and head higher, which to me, I would not be surprised if that was the case. We do need to get back above that 50-day moving average, but as it stands right now, that's a pretty strong move following these hammer candles here. So that could be the temporary bottom. Be careful for a potential dead cat bounce. I don't see that right now because this is just a big green candle, but it's always worth noting that if we get some shooting star type candle or inverted hammer, that's when you want to be a little bit more cautious. But right now, it looks like the bulls are pressing, and they're pressing fast and aggressively to all-time highs. All right, everybody, that's all I have for you on today's market brief. Just to quickly recap, right? Let's find where the dollar is going. Let's try to find out where yields are going. As it stands right now, it really does seem like the Russell 2000 or the IWM wants to head higher, and I do see a lot of potential in the IWO still from a good risk versus reward standpoint. If you haven't watched my Sleeping Monster scan, it's funny because I saw a couple finance people in Twitter start to post some of those charts that I pulled on the scan. So it's like, oh, it's kind of, it's a little confidence boost. It's like, okay, now other people are starting to see these charts. So it kind of just adds to, the fuel of potential moves there in those stocks. So we'll continue to monitor that. Everybody have an excellent day.